Giving us your take on the index as well as the individual stocks. Well, let's get back to Prakash Diwan, who's been waiting by. Prakash, before we let you go, I wanted your view on Ambuja Cements. Now, one part of the street believes that the deal happened at around 385. So at least, that could be the price that you get in the near term. While the flip side is, in the other part, the bearish sentiment is Ambuja never traded at such elevated levels. The re-rating was done only post Adani taking over. How would you look at the stock? It had a big recovery in Friday's trading session at around 370 odd. Your view?
So Nigel, that's a very important point that you raised because, there is a price anchoring bias here. Because the offer price was at a particular level, and if you see the stock recede from there or is available below that, you tend to kind of start seeing value in it. But remember, this acquisition was fairly aggressive, given that the acquirers were not from the cement business. It was not something which was a sideways acquisition. It was an absolutely new thing for them. And they've overpaid for it because of the kind of scale and size that they've been seeking. The other players probably didn't offer that aggressive a price for the simple reason that to sweat an asset like this, you would need to restructure it quite significantly. And that's going to be a time cost, if not just financial cost. So people have to live with the fact that if Ambuja has to start delivering great value from this level, it'll take it at least 3 years, 4 years, because given the kind of capacity expansion in the market, I mean, you see the numbers, some of the mid-sized players are struggling to get margins to be even at the same level as last year, whether it was a Birla Corp or JK Cement, except for Dalmia Bharat, which I like because of the kind of internals that they have, the kind of efficiencies that they have. It's going to be extremely difficult for people to ramp up volumes as well as, improve on profitability. So there's going to be a long winter for most of these large cement players, including the likes of Ultratech. While things look definitely very rosy in a longer term, but in the next year or so, it's going to be a lot of challenges. So I won't jump at it, but you would look at it separately. Forget that 385 is the reference price. Whether at 340, 350, 370, does it offer value, and at what time it takes for you to get this relevant ROEs. So I think the ideal band would be closer to 350 and between 330 and 350. If it comes into that zone, you'll probably be much better off. But don't jump at it just because it's less than 385.
Okay, well, thanks a lot, Prakash, for joining in. It's 9:06, so we're heading into the pre-opening rates, but the Adani Group crisis